IFSB, Islamic Financial Standards Board 22, presented by final year student from Diploma of Accountancy from University of Malaya Center for Continuing.
Assalamualaikum. My name is Nurul Izzati binti Razali. I want to present about Introduction IFSB 22. IFSB, or also known as Islamic Financial Standards Board, is an international standard-setting organization which was officially inaugurated on 3 November 2002 and started operation on 10 March 2003. The organization promotes and enhances the soundness and stability of the Islamic financial service industry by ensuring global prudential standards and guiding principles for the industry. Next, background IFSB 22. On 6 December 2018, the Council of the IFSB in its 33rd meeting resolved to approve the issuance of the reverse standard on disclosure to promote transparency and market discipline for institutions. IFSB 22 update the IFSB previous standard on disclosure for the banking segment, IFSB 4 December 2007. In the line with the following publication issued by the Basel Committee on Banking, prior to the issuance of the IFSB 22, the IFSB issued the corresponding exposure draft for public consultation from 28 March to 28 May 2018. Next.
Mission IFSB 22 revised standard on disclosure to promote transparency and market discipline for institutions offering Islamic financial service IIFS banking segment. Objective IFSB 22 facilitate access to relevant, reliable and timely information by market participants generally and by investment account holders in particular, thereby enhancing their capacity to monitor and assess the performance of IIFS. Second, improve comparability and consistency of all disclosure made by IIFS. Third, support financial consumer protection by offering useful information, disclosure on Islamic banking products, and enable market participants to complement and support through their action in the market.
Now is direction of the standard. The first principle is to have formal disclosure policy. This approach is for determine what disclosure will make an internal governance process and satisfy control over the disclosure process. The second is disclosure should be clear. Disclosure must be presented in an understandable to stakeholder. Important message should be easy to find and be clearly. The third is disclosure should be comprehensive. Disclosure should describe the main activity, all significant risks, and support by relevant data and information.
Principle 4. Disclosure should be meaningful to users. Disclosure should highlight an IIFS most significant, current and emerging risks. And Principle 5. Disclosure should be consistent over time. It is to allow stakeholders to identify trends in an IIFS risk profile across all significant aspects of its business operation. In addition, deletion and other important change in disclosure from previous report, regardless of the driver of such change. Principle C. Disclosure should be comparable across IIFS. The level of detail and the format of presentation of disclosure should enable key stakeholders to profit. The IFSB recognizes the difference that exists within the disclosure framework among countries and the varying level of disclosure practice among the IIFS under their jurisdiction.
Hi, my name is Nur Alia Imani binti Ismail. I will explain about how IFSB 22 guiding Islamic financial institution. IFSB 22 are designed to enable market participants, especially the investment account holders, to access key information on the type of IIFS and the scope of the consolidation method used by members of an Islamic financial group. The purpose of this standard is to specify a set of key principles and practices to be followed by institutions offering Islamic financial services in making disclosures with a view to achieve transparency and promoting market discipline in regard to these institutions. This This standard is addressed to IIFS and to their supervisory authority. Second, capital structure and overview of capital adequacy. Capital structure refers to a company's outstanding debt and equity. It allows a firm to understand what kind of funding the company uses to finance its overall activities and growth. In other words, it shows the proportions of senior debt, subordinated debt, and equity in the funding. The purpose of capital adequacy determination for IIFS differs from that for conventional financial institutions in that its financing arrangements are either asset-based or profit and loss sharing musyarakah or profit sharing loss bearing mudarabah, and much of the funding is raised through unrestricted investment accounts that are in principle a form of equity. As such, the underlying assets involved under Sharia. Third, the treatment of investment accounts, including their risks and returns. For the purposes of this standard, an Islamic window operation is defined as part of a conventional financial institution, which may be a branch or dedicated unit of that institution that provides both management, investment accounts, and financing and investment that are Sharia compliant. In principle, these windows are potentially self-contained in terms of Sharia-compliant financial intermediation, as the funds managed will be invested in Sharia-compliant assets. This standard makes it a requirement. Fourth, the risk management process. The risks to which IIFS are exposed and the techniques they use to identify, measure, monitor, and control those risks are important factors which market participants consider in their assessment of an IIFS. In this section, several key financing risks are considered: credit risk, equity investment risk, liquidity risk, rate of return risk, market risk, and operational risk, as specified in the IFSB's Guiding Principles of Risk Management for IIFS. In addition, some disclosures on credit risk mitigation, DCR, and facility-specific risks are peculiar to IIFS. For each separate risk area, risk exposures by types of risk, and indicators of risk sharing with IAH. Each type of Islamic financing asset is exposed to a varying mix of credit and market risk. This mix can also vary according to the stage of the contract.
Asset encumbrance is disclosure of information about damage to asset imposed and not charged by the bank, provides an overview of the extent to which bank assets remain available to creditors in the event of insolvency. Restricted assets for disclosure purpose in this template are defined as assets that IIFS is restricted or prevented from dissolving. For general governance and Sharia governance disclosure, the disclosure of public governance and Sharia is designed to provide information on such governance structure, processes, and functions in IIFS. The main objective of this disclosure is to ensure transparency on the overall governance of IIFS and on their steps. Treatment of Islamic windows. For the purpose of this standard, Islamic window operations are defined as part of a conventional financial institution providing Sharia, fund management and financing and investment that comply with Sharia. Purchases based on ijarah muntahiyah bitamlik, reduce musyarakah and murabahah without such funds. For consumer protection, IIFS will provide its customer with appropriate information regarding any deposit, investment, or financing product that comply with Sharia. Disclosure in customer protection areas I mean to include the important information relating to the product, term and conditions, mediation and handling of the complaints as well as usage charge, fees and commissions. This certification request for the last but not least, social, economic and environmental impact disclosure. The social, economic and environmental impact disclosure in this standard seek to address the aspect of disclosure in relation of IIFS contribution towards socio-economic, economic and environmental sustainability through the activities. IIFS must disclose their initiatives and policies to ensure that their activities have a positive impact on and create value for community, economy, and the environment.
Now we have come to the conclusion of this presentation. Each year, IIFS will be revised by the board to improve the standards as to follow the latest requirement of Sharia. IIFS helps Muslim customers to feel safe and secure doing financial activities or transactions free from prohibited elements. All financial institutions and personnel must be aware of the changes as to prevent mishap. Customers should also be